Welcome to All Stocks Index, a video series that breaks down the financial performance of every publicly traded company. In this video, we look at Meta's financial results for fiscal year 2023. Meta, formerly known as Facebook, was founded on January 4, 2004. Headquartered in Menlo Park, California. Current CEO, Mark Zuckerberg. Number of employees, 70,800. Market cap is $1.4 trillion. Current stock price, $559. Meta belongs to a communication services sector in the internet content and information industry. Originally, what started out as a single social media platform, Facebook grew into a family of apps that include Instagram, Threads, WhatsApp, as well as virtual reality products and applications. Let's analyze Meta's financial performance for fiscal year 2023 by breaking down the 10K report. Let's begin with the income statement. Sale of products and services produces revenue, and after paying off all expenses, the company is left with net profit. The majority of Meta's profits come from its advertising revenue, which amounted to $131.9 billion in 2023. Reality Labs and other sources generated around $3 billion. Meta's annual revenue has been growing for the last 10 years at an average rate of 36%. In the last year, Meta made a record-breaking $135 billion. Cost of goods or services sold was 19%, a fairly consistent percentage historically speaking. Reported gross profit was about $109 billion. 57% was spent on operating expenses. Specifically, research and development was a whopping $38.5 billion expense. Marketing and development as well as general and administrative were around $12 billion. The last 2 years saw a huge increase in spending on R&D, about 30% of total revenue. This in turn increased operating expenses and decreased operating profits. Accounting for tax and other net expenses, we get a breakdown of all Meta's expenditures. Thus, after subtracting all cost, we are left with a net profit of $39 billion. Meta's net profit had a tremendous growth in 2010s, all the way up to 2021. But due to high cost of development of the metaverse, 2022 had a sharp dip. In fiscal year of 2023, Meta recovered and regained its upward trajectory. Profit margin, which is a ratio of net profit to total revenue, was almost 29%. A strong number, but not Meta's best, which was 39.6% in 2018. Earnings per share, a ratio of net profit to shares outstanding, was $14.87. This is actually a record for Meta. However, the growth rate of earnings is slowing down. Revenue growth is the main driver behind earnings growth. In addition, Meta repurchased and retired 92 million shares in 2023. PE is a ratio of company's share price to its earnings. It was 30.5 at the time of the reporting. It is exactly in the average range of Meta's PE ratio, which historically was between 20 to 25. Turning our attention to the balance sheet, total assets equal total liabilities plus equity. Meta holds an enormous amount of assets, a total of $230 billion, of which $40 billion is in cash alone. And for non-current assets, Meta has $97 billion in property and equipment. In contrast, Meta's liabilities are far lower than its assets, with accrued expenses being the largest at $24 billion. To further expand on the point of how well Meta managed its liabilities, let's examine its ability to pay its short-term debt obligations. First, the cash ratio. We take the most liquid assets and divide by current liabilities. In 2023, this ratio was around 2, indicating that Meta was well managed and financially stable. In fact, one can interpret the decline from 10 years ago from 10 to 2 as an improvement in cash flow management and utilization. Similarly, current ratio of 2.67 suggests that Meta has enough current assets to cover its current liabilities without holding excess working capital like in 2010s. Checking the leverage ratio of total debt to total assets, we notice that it grew to 16%. What's interesting is that around 2016, Meta practically didn't have any debt, but over the last few years, debt financing began to sprout. Similarly, after 2018, debt-to-equity ratio started to rise, but it is still much lower than industry average. Meta did not pay dividends until 2024, when it finally announced a quarterly cash dividend of 50 cents per share. With this announcement, Meta stock became very attractive for investors. Return on assets remained in a favorable range, indicating that Meta is efficiently managing its balance sheet to generate profits. Similarly, return on equity was fairly stable and financially beneficial for investors. Breaking down the cash flow from operating activities, net earnings attributed to the most of the cash inflow in fiscal year 2023. Furthermore, Facebook is known for its stock-based compensation given to employees, showing here as $14 billion. As for investing, Meta spent $27 billion on additions to property and equipment. Another large outflow of cash was on the financing side, where Meta paid almost $20 billion on repurchase of common stock. So does Meta have plenty of cash? Strictly cash, Meta has about $42 billion. If we add investments, that amount goes up to $72 billion. However, Meta has taken on some debt, so subtracting it from available cash leaves the company with $34 billion. Definitely plenty of cash to invest in metaverse projects. Investors and analysts typically look at the company's free cash flows, which is calculated by subtracting capital expenditures from operating cash flows. Meta is doing a good job growing its free cash flows, reaching a record level of $43 billion in 2023. Estimating free cash flows into the future and discounting them to present value, we can approximate the company's intrinsic value and derive its current share price. We calculate $472 a share. According to this model, Meta is trading at a premium. That's all for now on Meta. If you like this video, please like and subscribe. We plan to provide similar content for all publicly traded companies.